Hello, good morning and welcome to the weekend edition of the newspaper show. I'm Cheryl D'Souza and this is the show where we get you all the top headlines as they're on the Economic Times as well as the Times of India. So before I get going, we're taking you through the headlines. Here's a small note for all of the viewers and all of the subscribers of the Economic Times as well as the Times of India. In case you've heard rumors that the newspapers are not safe, please do not pay any heed to that. Those are totally unscientific. There is no rationale to it. The Economic Times and the Times Group presses follow stringent safety norms, including the vendors as well as delivery agents. They follow all the safety protocols. You have nothing to worry about. So go and contact your delivery agent and get your copy of the Economic Times or the Times of India. Or otherwise, you can at least log on to www.wantmypaper.com and let them know that you want the copy of your Economic Times. But for now, let me get going with the top 10 headlines as they're on the Economic Times. And first up, it is the MPC surprise meet that took place yesterday, and the RBI had cut rates once again. 40 basis points cut in the repo rate. Our RBI governor also said that the economy may contract. Moving on, you have a third of NSE manufacturing companies that are back at work. Anil Ambani is asked to pay 5,448 crore rupees to Chinese banks. Apart from that, it was a brand new week and it is a brand new investor coming in for Jio platforms. Jio platform bags 11,000 crore rupees from KKR, another investor entering Jio platforms. Moody's has come out with the view that our GDP growth, India's GDP growth, will shrink in FY21. Apart from that, your finance minister that has urged lenders to ease flow of credit to MSMEs. And the government is planning stricter check on FPIs from China as well as Hong Kong. Apart from that, let's talk about the job market, and job enrollments have plummeted in the month of March. Moving on to COVID-19, you have ICMR that's cleared hydroxychloroquine for wider usage. And lastly, let's talk about the aid for Bengal, and the Prime Minister has announced 1,000 crore aid for West Bengal on back of the cyclone. So those are the top 10 headlines coming in from Economic Times for you this morning. But let me move on and let me talk about the corporate headlines as they're on the Economic Times. And first up, that is CCI asks Zomato for information on Uber Eats unit buy. Moving on, you have 4 firms in race to chalk out startup growth plan. Bharti Tele has raised 3,500 crore rupees via commercial paper, and lack of support for hotels is disappointing. That's the word coming in from Vikram Oberoi, who is the MD of the Oberoi Group. And lastly, you have Cipla and Hetero. They're seeking trial waiver for remdesivir. And that was a roundup of all the top headlines on the corporate front as well as on the general news front that's there on the Economic Times. But let's get going with the top story that's there on the front page of the Economic Times. But right here it is. Anil Ambani has been asked to pay 5,448 crore rupees to 3 Chinese banks. Ambani is seeking legal advice after ordered to pay within 21 days. A big story coming in, a big blow coming in for Anil Ambani, and my colleague Danish filed a report on this particular story earlier. Listen in to what he has to say.
Anil Ambani has 21 days to pay $716 million, which is a staggering over 5,000 crore of rupees to Chinese banks seeking to recover the loan that they gave to Anil Ambani's Reliance Communications in the year 2012. The extraordinary judgment today came after Justice Ter was told by the barrister representing the Chinese banks that Anil Ambani had failed to deposit the $100 million that was ordered by a UK court in February. After failing to deposit that money. The banks sought a summary judgment which was granted today by Justice Tere. This means that the banks can now initiate proceedings to seize assets belonging to Anil Ambani in India and elsewhere. This massive blow comes as Anil Ambani has been trying to restructure his flagging fortunes and is already into a series of litigations in India involving his companies and Indian banks. The Chinese banks had approached the High Court here last year saying that Anil Ambani had given a personal guarantee to the $900 million loan that was forwarded to his company. Anil Ambani's defense was that he never gave that personal guarantee and that his employee was not representing him when he gave that assurance to the Chinese banks. That defense was summarily rejected by the courts earlier, and the court had said that Anil Ambani has to deposit $100 million in court, and the matter was supposed to go on full trial. But today's judgment by Justice Tere means that Anil Ambani has a massive issue on hand wherein he will have to make that payment. In the absence of that, the Chinese banks can now initiate proceedings to recover their dues by seizing his assets in India and elsewhere. Anil Ambani had pleaded poverty, in fact, and had told the courts here earlier that his net worth is negative and that he is in no position to pay to the Chinese banks. That defense was also rejected by the court, which noted that in the past his brother has come to his aid and that there are reasons to believe that the Ambani family will still help him steady his boat. Today, development means that Anil Ambani has a further task at hand, and it remains to be seen whether he will be able to extricate himself from this very difficult situation.
That is a big story that we are tracking. That is Anil Ambani to pay 5,448 crore rupees to 3 Chinese banks. But let's move on, and another story that's there on the front page of Economic Times, and here you go. This is the story that I'm talking about. After the FDI curbs, India plans stricter checks on FPIs coming in from China as well as Hong Kong. Let me read the news of the paper for you to get more understanding of what this particular story means. Stringent collections of data on cards as government plugs loopholes. India is considering additional checks on foreign portfolio investors from China as well as Hong Kong after making prior government clearance mandatory for any foreign direct investment from 7 countries it shares land borders with. That includes China as well. The Finance Ministry is in talks with the Commerce as well as Industry Ministries, SEBI and RBI on the proposed framework after concerns about such inflows were raised when China's central bank increased its stake in HDFC. This is what triggered being the stricter norms and stringent rules and also more scrutiny on such kind of investments. So under the watch, it is 16 registered FPIs from China and 111 from Hong Kong. There are details of FPIs' ultimate beneficiary owners are being sought. Also, extra scrutiny, new body to approve Chinese FPIs that are being mulled. So this barrier is to check any investor from these places gaining any control in any of the Indian companies. So this is a big story that we are also tracking. That is that government is planning stricter checks on FPIs from China as well as Hong Kong. But let me shift focus now from page 1 of Economic Times right up to the page 7 of Economic Times, and that is on the agri panel. That story came yesterday in the afternoon. It's a source-based story then that if you see agri price panel for raising prices of kharif crop MSPs. So this is a story that's there on the Economic Times. What it's talking about is the government is likely to raise the minimum support price for rice by 2.9% per quintal, significantly raise the procurement price also of some coarse grain as well as pulses. So this particular move coming in as a move to aid the growth, to revive the growth. The agri price panel is for raising the kharif crops MSPs. The CACP, which is the Commission of Agricultural Costs and Prices, recommended higher support prices for 17 crops. So this is one of the recommendations that is going through. If I read something that is written over here on the Economic Times, is saying that the cabinet will consider the proposed new rates, and normally the CACP's recommendations are fully accepted. So this is all as per government sources. The cabinet is yet to go ahead and approve the rate of price recommendation that has come from the Agri Price Panel. But moving on now back to the first page of the Economic Times, and that's another big story that's coming in, that's sort of a ray of hope coming in, that the things are kind of getting normalized over here, and that is, if you read, is that a third of the NSE manufacturing companies are now back at work. So here you go, this is the story that I'm talking about. This is the front page story, that a third of NSE manufacturing companies are now back at work. The firms say the demand remains weak and disruption continues to plague the operation. Remember, you have even the migration of the laborers that is actually hindering work at these factories as well. 410 out of 1,300 non-services firms have resumed their operation. This is all as per NSE data. Disruption: auto companies have restarted their production, but registration of vehicles are down 90% as dealers are shut. If you see cement makers, the operating capacity is at 50% as dealers are unwilling to stock up due to uncertainty. So there is a pickup in activity. Also, you've seen power demand down 14% in May from a 27% drop that was there in mid-April. E-way bill generations is down 60% in May, but compared to an 80% drop in the month of April. And cement sales in rural areas are back at 65 to 70% of the usual. So some sort of normalcy trying to kick in, but yes, you have the disruption because the demand is weak, also the labor issues, so that's why the restart of production is not at the optimum level. But let's shift focus from the auto sector to a meeting that took place yesterday. That is, the finance minister held a meeting with the top bosses of PSU banks, NABARD, SIDBI. And what did the finance minister speak to the representatives of these financial institutions? My colleague Ashna Mishra is joining us with more details. Ashna, take it away.
Yes, Finance Minister met the heads of the public sector banks as well as SIDBI, NABARD and National Housing Bank on Friday and reviewed the sanctions of loans that have happened so far, the pace of that, the concerns of the borrowers as well as the lenders currently, as well as a retransmission of the interest rate cut and the operationalization of the Atmanirbhar package that has been announced by the government in several tranches very recently. Now, PSBs have been asked to prioritize that the sanctions under the emergency credit line and the reassessment of working capital, and all of these things should be prioritized by the banks. That has been asked by the finance minister, and in fact they have been given a target to achieve a fully digital loan documentation process. Other than that, the liquidity support of 3 lakh crore rupees for the additional some enterprises and all of those things, they are currently under works and are being operationalized. In fact, finance minister also emphasized how during this lockdown 97% of the bank branches as well as 80% of the ATMs remained operational throughout this period of lockdown. For MSMEs, if we talk about MSMEs, then the partial credit guarantee scheme is now operational, and this scheme will ensure liquidity for MSMEs. The 100% government guaranteed 3 lakh crore credit line is also expected to be operational soon. The final details are being discussed right now, and it will again be operational soon. Then coming to the Kisan credit cards, 34.88 lakh of those cards have already been issued, and the credit limit of these cards includes 30,000 crore in total. Now, with respect to NABARD, it also said that it has already sanctioned 30,000 crore in the special liquidity measures. So yes, all of these measures, what is their current status as well as what will be the road ahead, this was the key discussion that took place in the meeting between the finance minister as well as the bankers on Friday.
Let's shift focus now to a story that's there on the page 5 of your Economic Times, and that is, here you go, ICMR has cleared hydroxychloroquine for wider usage, but with some riders. This is the story that's there on the Economic Times, and this graphical representation actually has what it is all about. So I'll read directly off from there for you, making it very clear that the drug can be given to the following asymptomatic people, and that is, one is the health workers involved in containment efforts, second is the health workers, healthcare workers in non-COVID hospitals, third is for frontline workers, fourth is for household contacts of laboratory confirmed cases. What are the caveats that the ICMR has laid for the usage of hydroxychloroquine? One is the drug should be discontinued if it causes cardiovascular side effects. Very important coming in for the usage of this drug. You cannot use this until and unless you have been asked to use it. So please do not go out there and buy or stock up on this particular drug. The ICMR has cleared it for wider usage, but with a caveat, it is mainly for healthcare workers. Drug is not recommended for prophylaxis in children under 15 years of age, not to be given to pregnant women, and drug to be given under strict medical supervision with informed consent. Yes, remember that this particular drug has not been tested against the coronavirus after finding only mild side effects in its assessment. So Indian Council of Medical Research has recommended a wider use of hydroxychloroquine in the battle against COVID-19, brushing aside ethical concerns over a drug that has not been tested against coronavirus after finding only mild side effects in its assessment. So for now, it's only for the healthcare workers, and only if you are asked to use this particular drug. That is the note coming in from ICMR on hydroxychloroquine. But let's move on and let's talk about another development that came in yesterday, and that is on the sale of liquor in the state of Maharashtra, and primarily for the city of Mumbai. BMC has finally approved home delivery of liquor. My colleague Utkarsh is here joining in with all the details. Utkarsh, take us through what this means for the city of Mumbai, how this will be done, and I believe this is only for home delivery of liquors.
What it means for the city of Mumbai, and Mumbai kills alcohol after 60 days, Cheryl, but we all remember the first day when the alcohol shops were open, liquor shops were open, and the kind of long queues we saw really, and it was not more than 24 hours, I believe, that the BMC went ahead and came out with an order banning the sale of alcohol shops again. And now it is almost after 60 days, BMC has gone ahead and given this order of allowing home delivery to permit holders. Now, permit is something which you can get at the liquor shop as well, and you can ask them to get the permit for you. One thing which is very important here is the fact that they have gone ahead and written that e-commerce platforms can be used for the delivery of alcohol. This is after news of Swiggy and Zomato really coming in that they will, or they're willing to, and they will start alcohol delivery. One thing which is very clear in the order is that the people who are in containment zones, alcohol will not be served to them. And when we speak about Mumbai, there are a lot of containment zones even at this point of time. Also, lastly, that it does not mean there should be any queuing up at the liquor shop, and more importantly, the on-the-counter sale will still remain closed. But yes, it's a Friday starting, it's a Saturday morning. If you're really looking for a good weekend, from today itself, home deliveries of alcohol in the city of Mumbai will start.
All right, thank you, Utkarsh, for giving us all the details of that particular story. But let's move on and let's talk about Amazon. And in midst of all the layoffs that's happening all across the world by unicorns and startups, here you go, you have Amazon that is all fired up to hire 50,000 temp staff. So some sort of good news coming in when it comes to this front, even though it may be for temp staff. But some sort of hiring coming amidst of gloom and doom when it comes to job markets. And I have my colleague Chandra joining us to take us through what the story actually means. Chandra, take it away.
A ray of hope coming in days after we've been hearing about thousands of layoffs happening across unicorns. So Amazon has said that it has opened up 50,000 seasonal roles because of the surge in demand that they've seen in the last few weeks. Now remember, the government has been opening up e-commerce in phases. Non-essentials was opened up in the last few weeks, and e-commerce players have seen a surge in pent-up demand, which is why you also have the likes of Big Basket, which recently said that it is hiring nearly 15,000 people. Now Amazon has said that it's opened up 50,000 roles across various functions such as fulfillment centers, delivery network. This would also include part-time roles that they have for individual contractors as part of Amazon Flex. So this at least should absorb some of the shock that we've seen in the gig economy segment, which has come under huge strain in the last few weeks after a round of layoffs by Zomato, Swiggy, Ola and others. We have to wait and see if this trend will continue, since they've mentioned seasonal role. We have to see if the surge in demand keeps up with this, but at least for now, a bit of positive news on the jobs and hiring front.
All right, now shifting to news coming in from the sports arena. It's on the Times of India on the sports page right here. Both the stories we will talk about is on the page 11 or page 12 of Times of India. But first we will talk about that BCCI has moved Supreme Court to allow Sourav Ganguly as well as Jay Shah for full terms. We will talk to my colleague Karishma Singh on more on this story. Karishma, looks like a big change coming in the BCCI, where they are asking for full terms for Ganguly as well as Shah.
Well, it's absolutely the BCCI moving Supreme Court, because remember, Jay Shah and Sourav Ganguly, when they took over their respective posts, were only to take it for 9 months as per the new protocols that were in place, as per the new constitution. But now what we learn is that the BCCI has moved Supreme Court for Sourav Ganguly and Jay Shah so that they can fulfill their term of entire 3 years. And now we will have to see when the Supreme Court undertakes a hearing on this matter and what is going to be the further decision in this entire BCCI and Supreme Court matter, Cheryl.
Right, Karishma, there's another story that's there on the Times of India sports page, and right here, big one. The T20 World Cup is set to be postponed. What is this all on back of COVID-19 and the uncertainty that it is causing?
Absolutely, Cheryl. It is one of the major reasons, because remember, Australia, the country that is supposed to host the T20 World Cup, has announced a lockdown till September, and then various countries will have their own quarantine rules. So it is going to be next to impossible for Australia to conduct this T20 World Cup in October. Expect the teams to fly in and just start the tournament. It is going to be very, very difficult. So the most viable option that we understand from our sources, and what TOI is also reporting, is that on the 28th of May, when the ICC meets for a meeting with the cricket boards, the option of postponing T20 World Cup will be on the table, and it is likely that this decision could be made in that meeting itself.
All right, Karishma, thank you for joining us and taking us through the top stories that there on the sports arena. One, that is the T20 World Cup may be postponed due to COVID-19 issues. But let me shift focus and let me talk about the Jio platforms and the KKR deal. Remember that it was a brand new week, and this week once again Jio platform has found a new investor, and that is KKR this time around. And Economic Times spoke to Sanjay Nair of KKR India. 1 second, I'll just get you that story. It's there on the page 4. And it's a Q&A that they've had with KKR's Sanjay Nair. And what does he have to basically say is that Jio's teleco digital combination was a key attraction for KKR to go ahead and also invest in Jio platforms. And there you go, you have the quote on the screen for you. All right, let's shift focus now to coronavirus and the top 5 coronavirus headlines. that is there on the Times of India this morning. And first up, it is COVID-19 cases have surged 2,940 in 24 hours in Maharashtra. So a bump up of 2,940 cases, positive cases in the state of Maharashtra. Moving on, GDP forecast to contract for the first time in 41 years, and this is all due to COVID-19. You had the RBI governor also echo the same for us about the GDP growth. Moving on, home liquor delivery gets a nod, a BMC nod. That is another story that we covered for you through the course of the show. Moving on, healthy elderly can fly. Arogya app is not a must. That's a word coming in from the aviation minister. And moving on, the Pakistan airliner carrying 99 crashed in Karachi yesterday.